Hey everyone, welcome back to the Mortgage Heroes YouTube channel, your go-to source for all things VA loans. Today we're diving into a topic that could save you time, money, and stress when buying a home with a VA loan. Why choosing a smaller lender over a big bank is a smart move. A lot of veterans assume that they should go with a well-known national bank for their VA loan. After all, they've heard of them, they seem trustworthy, and they're everywhere, right? But here's the thing, smaller specialized VA lenders often offer better rates, faster service, and a smoother process than the big guys. So let's break it all down. The problem with big banks and national lenders from our perspective. First, let's talk about why big banks and national lenders might not be your best choice when using a VA loan. Number one, you're just a number to big banks. Big banks have thousands, sometimes millions of customers. Their mortgage departments handle all types of loans, conventional, FHA, jumbo, and VA. So unless you get super lucky, you might end up with a loan officer who doesn't fully understand VA loans and treats you like just another file on their desk. Unfortunately, we've seen this a lot over the past 20 years. Number two, slower processing times. How could that be? Because national lenders handle so many loans at once, their underwriting process is often sluggish. A VA loan from a big bank can take 45 to 60 days to close, whereas a smaller lender can often get it done in 30 days or less. And in today's competitive housing market, closing faster can be the difference between getting the house or losing it. Number three, less flexibility and more red tape. Big banks follow corporate policies that aren't always veteran-friendly. For example, they might have stricter credit score requirements than the VA actually requires. They could require you to put money down even though VA loans don't require it. They may not approve certain types of homes that VA loans actually allow. And basically, their internal rules could block you from getting a home you could have qualified for with a smaller, more flexible VA lender. All right, so now let's talk about why going with a smaller VA lender, one that specializes in VA loans, is actually the smarter choice. First, VA loan expertise equals fewer headaches. Smaller lenders that focus on VA loans know the ins and outs of the program. They understand how to work with VA guidelines, meaning you'll get accurate advice tailored to your situation. They can navigate tricky VA requirements like funding fees and residual income calculations, and they won't mislead you about what's required, unlike some big banks that overcomplicate things. Second, faster, more personalized service. When you work with a smaller VA lender, you're not calling a 1-800 number and waiting on hold. You're getting direct access to a loan officer who actually knows your name and your situation. This typically means faster responses, quicker problem solving, and a smoother loan process overall. Third, better interest rates and lower fees. Here's something a lot of people don't realize. Smaller VA lenders often beat big banks on interest rate and fees. Big banks have higher overhead costs. Think huge office buildings, massive marketing budgets, and corporate expenses. Smaller lenders focus more on competitive rates and lower fees to attract business, and that can mean thousands of dollars of savings over the life of your loan. Fourth, they fight harder to get your loan approved. That's pretty subjective, right? Nope, it's not. Big banks have rigid guidelines, and if you don't fit their mold, they can just deny your loan and move on. Smaller lenders, on the other hand, take a more personal approach and actually work to get your loan approved. If your credit score is a little lower, they'll help you figure out solutions. If your income situation is unique, they'll find some workarounds. If you hit a roadblock, they'll actually advocate for you instead of just saying, sorry, we can't help you. Let me give you a quick real-life example. A veteran we worked with was pre-approved for a VA loan at a major national bank. Everything seemed fine at first, but 3 weeks before closing, the bank suddenly told him they needed a 660 credit score to qualify. The problem? The VA doesn't actually have a minimum credit score requirement. That was just the bank's own internal rule. The veteran switched to a VA-focused lender, us, who not only got them approved with a lower credit score, but also closed in just 25 days, beating the big bank by almost an entire month. And this happens way more often than you think. So at the end of the day, using a smaller VA-focused lender just makes sense. We specialize in VA loans, so we know the program inside and out. We offer faster closing times with fewer headaches, and we have better rates and lower fees than the big banks. And if that weren't enough, we actually care about getting your loan approved. So if you're a veteran or active duty service member thinking about using your VA loan, my best advice is this. Skip the big banks and go with a lender who puts you first. Want to learn more? Drop your questions in the comments. And if you found this video helpful, remember to like, subscribe, and hit that notification bell so you don't miss our next video. Thanks for watching, and I will see you in the next one.